Record.
Hello and good evening.
Good evening, sir.
Please, I hope you are all doing well.
Yes,
We thank God. So we have today we'll be looking at scheme design, how to design your own capital reduction scheme. Is that okay? But before we go there, I want you guys to tell me how we are going to be dealing with a question like this. Think you see, I told you there's a problem with my Telegram. That's why I've not been able to upload the previous one. I just solved it today, so you'll get both today and the previous recording there. I hope that's okay. Because the way the page was silent there, I thought today people don't want to join class. Do we have any questions before we proceed? Any questions for me? Yes. Any questions for me? Obia Edinho. That means nobody has a question for me.
Ask your questions.
Yes, boss.
Prof, I was saying that it looks like I have to talk to myself. Well, we have not done proper revision, so we'll do that and bring more questions.
Okay. The time is not on our side, though. You know that. So
Sure.
Start revising. Okay. If that is well said, you have no question. Let's begin. Shall we pray? Father, we bless your name for bringing us together as a family these days. We pray that you take absolute control of our class. We come before your throne of grace to ask for forgiveness in your name. Oh Lord, we are but children before you and we know nothing. Hold our hands and show us the way as we commit today's lesson into your hands. Amen.
Amen.
So we have here the Bank of Ghana earlier last year announced an increase in the minimum capital requirements for microfinance institutions in the country from the current 500,000 to 2 million by June 2018. And Capital Link, a microfinance company, has been affected by the increase in players in the microfinance industry, which has seen a reduction of its loan portfolio and an increase in loan default rate. Okay, so many people took loans, but so many people didn't pay back. So the company will definitely be what? In a loss position. Do you all agree? Do we all agree? Because if people are taking so much loans from you and they are not also paying back, what would they result in? What would they result in?
Bad debts.
A lot of bad debt, right? Which means you'll be making losses. True or false? Now, we have been given this information, right? And they are telling us that depositors have the information that Capital Link is considering funding options to ensure the survival of the business. They are, however, not convinced that management of Capital Link will be able to raise the required capital to meet the minimum requirements. And what was the required capital? Let's go up to see. What was the required capital to meet the minimum requirements? Yes, how much? How much do we need to meet the minimum requirements? Please, I hope you can all see my screen. I want you to be involved in the question. That's what I'm asking. How much is the minimum required capital? Please read. You have to read. How much? How much?
2 million Ghana cedis.
2 million.
They said it moved from 500 to 2 million. So the company must be able to what? Get this capital, not so, or shut down. So in that case, let's see. They said depositors have the information that the company is considering funding options to ensure the survival of the business. They are, however, not convinced that management would be able to raise the required capital to meet the minimum requirement. In stakeholders meeting, management of Capital Link have proposed two possible options for the company's future. One, to close down I get the company, which is a closed down mission. So this type of question is what we call an evaluation question, right? Scheme, where you evaluate the scheme to see whether closing down is better or what? Continuing or restructuring the company is better. Do you get it? So Unity Capital has made what? A firm offer of 600,000 for the company's leasehold property, and total loan portfolio is conservatively valued now at 592,500 in a forced sale. That means that's its exit value, right? Or its breakup value. Meaning if we are liquidating, then we are selling our loan portfolio for this much. An investment in T-bills now amount to 465, not so. And liquidation expenses are estimated at 30,000, and interest to depositors is also what? 330,000. So they've given us the for sale and the breakup values of the various items on the P&L and the balance sheet also. And then we can go for a second scheme, which is a rescue mission, okay? Where management of Capital Link proposed to implement a scheme, which includes a cheap loan of 600,000 from a distress fund, which is set up by an NGO, okay, who are business rescuers. The following terms have been arranged. 375 will be reserved to pay for the loan from the NGO. When the first installment falls due, the NGO has asked to accept 20% debenture in exchange for the balance remaining due. So the debenture would be repayable in 4 annual installments of 150,000, commencing 28 February 2017, with the interest due for the preceding year paid on the same date. Assuming current rate of interest on all borrowing at 14% and calculations being made on 30th April, and either scheme could be put into effect immediately. I get it. So they've given us the present value of any amount that is in the future. We have all of them, including annuities. And they said by means of what? A numerical analysis of the two schemes, evaluate how much the bank will recover from each scheme. And two, you are required to discuss two advantages of each scheme. So my question is, how then do we go about it? How then do we go about it? How then do we go about this question? Everybody is quiet too. Okay. Well, this
Hello,
question,
sir.
yes, boss.
Is it possible that you can put the question on our page for us so we can open it and see the full question?
I think you can download it. It's so that one
Which year?
as an assignment. Okay. I think it's May 2018.
Okay, sir. Thank you.
Take it as an assignment. I hope that's okay. Now we have to go and look at how to design a scheme. Scheme design. Because nobody is asking or telling how we should go about it. Let's look at how to design a reconstruction scheme. Okay. Now, when they tell you to design a scheme, in designing a scheme for reconstruction, it is assumed that in the absence of a capital reconstruction scheme, the liquidation would be inevitable. So anytime they say design a scheme, that means we assume that liquidation is inevitable, right? No matter what you do, liquidation must happen, right? Unless the scheme provides something better than liquidation. Do you understand? Do we understand? So as the alternative source of benefits to the interested parties is the amount recoverable on liquidation, it is essential to recall the order in which the proceeds from the sale of assets must be distributed by the liquidator. We learned this, right? I told you anytime that you are doing what? A statement of liquidation. What's the format or how do you go about it? We always start with a debt secured by fixed charge. Do you remember? Then a cost of liquidation. Then if you have preferential payables like payee deductions, any SNET, VAT, excise duties, staff salaries, things to do with taxes and employees, right? You have to what? Consider distributing to pay them off. Then you look at those secured by a floating charge. Remember, fixed charge is secured in a particular asset, right? A particular fixed asset. But when it comes to floating charges, secured in a class of small assets, right? So class of small what? Assets. That's what we say is what? A floating charge. Then after that, you look at all unsecured payables. Okay, so the ones which have no security attached to them, like trade payables and all other ones that has no sort of security attached to them. Then whatever is left must be shared for your preference shareholders. Then it goes down to your ordinary shareholders. I hope that's understood. So this is the order in which we share. Now, most of the time, it will not be up to. So you have to find a way to prorate for the unsecured payables. Okay, so you deal with all the ones at the top. Then when it gets to unsecured payables, you have to prorate. You do it on pro rata basis. So that's mostly what we mostly have. Is that okay? So let's see. What's the basic procedure? So first of all, you always have to determine the amount of capital reduction that is required, okay? And this will mostly depend on anything that has to do with profit or loss related, right? So any intangible assets that will be written off, any tangible assets that will be written down, revaluations, income surplus, anything that would, if the company has not liquidated, what is the total loss that they are going to what? They are going to incur, assuming the company had not liquidated. I get it. That's the total capital reduction that is required, or what we call a statement of maximum loss. Do you get it? Once you have been able to determine how much capital reduction we require or how much total loss we are going to meet had the company not liquidated, we will now determine how much each stakeholder will get if we were to liquidate. You get it? Then when we finish, we'll determine the appropriate and acceptable sacrifice that each shareholder will have to, each stakeholder will have to bear, giving reasons in each case. Then we draw up a resultant statement of financial position. We can evaluate the scheme from the point of view of each stakeholder. Okay, so that's literally what you are supposed to do. Okay, but one thing is that when we take a question, I'm going to show you a simple way you can do this, right? Because most of the time, ICA will always want you to, what do we call it? Write the scheme, but there's a quick way you can do this, and you use the scheme as underlying assumptions that you use for, right? So this is the steps that I would want you to follow. So most of the time, I always tell my students that, it is always good to start with liquidation. So always start by first doing your liquidation statement to know how much they will get on liquidation, right? When you finish, then you come and do what? Your maximum loss, which is like the amount of total loss they will get if the company had not liquidated, not so. So when you finish, then you now come and share the maximum loss, right? So share of the maximum loss. Are you getting it? When you finish, now that you have been able to share the maximum loss, you know how much each of them are getting, right? So now you move to the design of the scheme. And before you can design a scheme, you must know, are you getting it? You must know who is receiving and who you are going to pay. Are you getting it? So you are going to look at your various sources of funds. Where are you expecting to get money from? And the application of the funds. Are you getting it? And payments. So you get money from somewhere and use it to pay. Are you getting it? Once you have been able to do that now, you draw a resultant what? Balance sheet. Then you can what? Evaluate your scheme. Okay, to see if liquidation is better or the other one is better. So this approach we use, which is not so different from what we just discussed. Meaning that one you can decide to start with your maximum loss, do liquidation, share the maximum loss, look at how you can deal with that maximum loss, who is losing, who is gaining. You find a way to what? Deal with all those people. Now, when scheme design comes, students hate it. I get it, but it is one of the things that the more you solve questions, the more you become used to. These are we all okay? Are we all okay?
Yes, sir. Yes, sir.
So let's see how we go about it. So the first thing you have to do is try to see if the company is liquidated, what will the stakeholders get, right? And when it comes to liquidation, I told you always, if you are liquidating, that means the company is no longer what? No longer a going concern, true or false? So if you are no longer a going concern, then the right values that you have to use are the first sale values, right? So first sale, if you see first sale value or you see the breakup basis, okay, breakup value, meaning say where yeah, amount I can sell it now. If I'm liquidating, if you can't find this, then look for liquidation values. So it depends. Some questions will give you some of them. So make sure you'll be able to identify those particular amounts and use them as the values for the assets and liabilities. And we already know how to liquidate, right? We must sell all our assets. When it comes to liquidation, we all know that we must sell all our assets, right? So we say proceeds from sale of our assets. Not so. After selling all our assets, if an asset value is not given, that means it will be realized at its book value. Okay. Then you distribute as follows. So distributed as follows. And what is the distribution pattern? I told you we start with what? Liabilities with what? Fixed charge. Then from there, where do we go? From there, where do we go? Nobody is talking. When you deal with liabilities with fixed charge, where do you go? Nobody is talking. Okay.
Unsecured.
No, you must go to liquidation cost. Okay. You always, please, I want you to keep this in mind though, because that's what you'll be using to solve your questions. So your fixed charge, liquidation cost, then you look at what preferential payables. Okay. So these are things to do with SNAT payee, anything to do with the government and your employees, right? So you deal with preferential what? Payables. Then from there, you deal with what? Liabilities with a floating charge, which is secured on a class of assets. Then you can now deal with what? Unsecured what? Payable. Then after dealing with all this, you are now left with preference shares first. Because remember, preference shareholders, they want their fixed amount. So if you cannot pay, you have to at least pay them. Then we come to our last guys, which are the ordinary shareholders. Okay, so this is the rule that you always have to follow. And make sure that if anything, you follow this strict rule so that when the figures are not up to, you can always use it to what? To do pro rata for the unsecured payables. I hope that is okay. So let's see. Now, this is what we have. They've given us a nice question. Busia Limited has been trading profitably for several years. For the last 4 years, the past 4 years, its operations have resulted in losses, and the board have decided to restructure the company. Okay, so this is the information we have. We have been provided with the additional information. We have the company's ordinary shares and cumulative preference shares, and no dividends were declared on the preference shares for the year. Okay. So they've given us the assets and their net realizable value, meaning today, if we are selling, this is how much they will be realized for, right? So this has been given. And they said the investment in Ebusia is a 55% holding in Obi Limited. And somebody has offered to buy it at 1,350,000, right? So we can sell to the person as that amount. I get in it. And it has been made for it and it has been accepted by the directors. So following a further feasibility study carried out on the project, it gave rights to what? The deferred development expenditure, right? But the directors have decided to discontinue this project. Once they've decided to discontinue the project, that means the project will lose its value. So when you look on the balance sheet, you realize that there's a deferred development expenditure here, right? So if this deferred development expenditure, management is saying that it has no value now, what do you do to this? What do you do to it? That means its value is worth 0, right?
Yes, sir.
Yes, because nobody will go and buy. But they said that the directors have decided to sell the patent for a net realizable value of how much? Of 1.8 million. That means this is the value we can sell the patent for. Inventory 2 should be written down by 2232, right? When you take the total inventory value from up here, you can take the 2232 out. I hope that makes sense. Then they say 22 debentures are secured on freehold land and buildings. That means what is it? Is it fixed or floating?
It's fixed.
Fixed charge, right? And they said the bank
Yeah.
has a fixed and floating charge over the asset in respect of the loan. That means this bank loan, what is it? It is asset with floating charge, right? Then they said it is considered that the proposed reconstruction should result in net profit after tax of 1.5 in the year ending 30th September and 1.8 more in each of the years after. Okay, now I've seen that a lot of ICA questions, when you see the evaluation that they've done, they don't calculate post-reconstruction earnings per share. But always when you do it, it tells the examiner that you have deeper understanding of capital reduction and capital reduction schemes, right? So they said the company will require a ratio of account receivable and cash to be 0.8:1 in future to trade satisfactorily. Now, this is what we call working capital requirement ratio, and I'll teach you how to deal with this, right? So you shouldn't be scared of capital reduction scheme design when it comes, right? It's so simple. It's so simple. It's so simple. Any questions so far? Any questions so far?
No questions, sir.
So now we can do it side by side. Let's try to see if we can get liquidation, right? A statement of liquidation. I don't know if you can see my screen. Okay. So can we get how much the assets were sold for? So we say what? Statements of liquidation. So we need to get their statement of what? Liquidation. So let's see. So we are working in thousands, Ghana cedi thousands. Ghana cedi 1,000, right? So in that case, we need a sale proceeds, right? For the sale of our assets. So how much did we sell our assets for? So what I will do is that I'll list all my assets here, right? That's what I want you to always do first. So list all your assets. So freehold, land and buildings, let me make it L and B. Then we have plant and equipment, also plant and equipment. Then we have what? Furniture and what? Furniture and fittings, not so. Then we have what? Investment. Then we have deferred development expenditure. Then we have what? Patent rights, not so. Then we have inventory. We have trade receivables. And we have our cash, not so, because we are liquidating. So we are selling all these to get cash. So if you have any extra cash, it's also part of your sale proceeds. Makes sense. So since we have all our assets, let's see what they were. So cash will remain as it is because you know cash there, it is ton business, no, right? We are closing down. So the cash will still be what it is, right? Because that's what we'll use to pay some of the liabilities. Because if you have cash on hand, you can pay some liabilities, can't you? So now let's go and check if any of the assets had new values or they had some realizable or liquidated values. Did any of the assets have some realizable values? Did they? Please give me the values.
Yes, sir.
What and what?
The freehold land and building.
Should be realized
4,000.
be realized for 4,005, right? Plant and equipment
Yes.
also be realized for 3,750.
3,750.
Furniture and fittings to be realized for 2,800.
2,800.
Okay, but the investment in Ebusia Limited, they said somebody wants to buy it at how much? 1,350. Not so. I've highlighted all of them. What about the deferred development expenditure? What did they say? It has no value, right? Because they want to discontinue the project. Please, I hope you are all following. What about the patent? Does it have a value? Does it have a value? Patent. How much is the value for the patent?
1,800.
1,800. What about inventories? The inventory was written down by what? 2,232. So what's the actual inventory value? Inventory was 3,510, right? So we are saying that, okay, our inventories used to be 3,510, but they said we should write it down by 2,232, right? No, so was it 2,232? Yes, 2,232. That means what should have been the value of inventory?
1,278.
1,278. Okay. Then trade payables, trade receivable. Was there any bad debt or anything? Was there any bad debt or anything about trade receivables? Was there? In the notes that we just read, was there anything about trade receivables? Yes or no? Please, we are a lot, but I only hear one voice. The rest, why? I said, did we see anything about trade receivables in the notes we just read?
No.
That means the trade receivable will still be realized at its original amount on the balance sheet, right? Which is 1,600, just like the cash. Do you get it? So this literally becomes like our total sale proceeds, the total amount you are going to get from what? The sale of what? Our assets. Are we okay? So this becomes our total sale proceeds. So when we add, what do we get? 4,005 plus 3,750 plus 2,800 plus 1,350 plus 1,800 plus 1,278 plus 1,600 plus 40. So we have 17,011. Is my figure correct?
Yes.
It's correct.
So we distribute it as follows. So distributed as follows. Now, how do you distribute this? This is my trick. First, I'll go and count. I get it. That's the 17,011. I'll go and count all my liabilities and see whether they are more than the 17,011 or they are less than the 17,011. Do you get it? Are you okay? So if they are less, then I know that, oh, then there will be what? Pro rata. I need to be doing some prorating. But if they are more, that means there's no need to do any prorating. Do you get the idea? So when we look at the total liabilities we had, current liabilities, you have 5532, right? Then we have what? Then we have 22% debentures, right? Giving us 7875. When you add the two, you have what?
13,407.
Okay, so 13,407, let's distribute. So you write liabilities with what? Fixed charge, right? Liabilities with fixed charge. What was fixed charge per the notes that we read? Which liabilities were having fixed charge? Which liabilities were having fixed charge? Oh, when you look here, you can even see it. We just read it. Not so. Look at the notes 8. What does it say? What does the note 8 say?
The bank has a fixed and floating charge over the assets in respect of the loan. The 8 says the 22% debentures are secured on the freehold land and buildings.
Yes. So what does that tell us? Do we have any liability with fixed charge?
Yes.
So 22% debentures, right? So
Yes.
percent debenture. How much was the value? 7875, no so.
Yes.
Then we need what? Cost of liquidation also. Did we have cost of liquidation? You see, I always list nil. There was no cost of liquidation in this question. Was there any cost of liquidation in this question?
No.
They didn't mention, they should have told us. There was nothing there, right? Meaning it was nil. Okay, then after cost of liquidation, were there any preferential payables like SNIT owing, payee owing? When we read the notes, no, right? But did you have any liability with floating charge? Was there any liability with floating charge?
Yes, yes.
What liability had a floating charge?
Bank loan.
Bank
Say
loan.
bank loan.
So bank loan, how much? 5350. 860, sorry. 5360, okay. Then we now have unsecured payables, right? Did you have any unsecured payable? Any other liability that had nothing attached to it? Yes, there was. The trade payables, right?
Yes.
Was there anything attached to it? Meaning it's unsecured, not so. Unsecured payable, how much was it? 4650, not so. Then we also have sundry what? Creditors, meboa. Sundry creditors. How much? 0.106. That's all.
Yes, sir.
Okay. So now that we have this, I think all our liabilities are shared. Or there's another liability. Is that all? So let's add all our liabilities and let's see. So we have 7875 plus 5360 plus 4650 plus 1060. And why am I getting 18945?
5.
It seems the it seems the liabilities are more than the way you. Then which one did we go and add first? Seems all the liabilities are 18945. Then which one did we go and add first? That means this one is more than. But when we add all these ones up to the floating charge, how much is it? Let's see. So always allocate the liabilities for the floating charge first. I thought the calculation we did first, there 13 something was wrong. So let's do it. We'll share this on pro rata. So let's see. How much becomes the secured liabilities? What's the total secured liabilities? Can it go into the 17? 7875 plus 5360, right? It gives us 13235. This 13235, can we take it out of the 17? Can we? So always the liabilities up to the floating charge most of the time, I get it. You can deduct them, but whatever is left, you prorate it. Do you understand? So what do we get? Can we take it out of the 17? Can we take it out? Please give me a response.
Yeah, we can.
Yes, that means we can pay off these ones. Then the rest we can share for them because he can answer. So that means we have 3,776 left. Not so. And this is the amount available for our unsecured what? For our unsecured what? Unsecured liabilities. Please, does it make sense to all? So now we have to prorate it. Unsecured liabilities, please be involved. The more you're involved, the more you tend to understand. How many unsecured liabilities did we have? Bank loan was secured, right? Debenture was also secured, meaning trade creditors and sundry creditors were not secured. Makes sense? I hope it makes sense.
Yeah.
Yes, sir.
So how do we apportion? What's the total? When you add it, how much is it? The two of them.
Sir,
Yes, boss.
the debenture was on the freehold land and building, and that's supposed to be 4,005.
Yes, it was on it, but the debenture that we have, as you see it, its value itself is 7875.
Yes, sir.
Do you get it? But where it is not enough, you can limit it to the value of the. Do you get it?
Okay.
Like what we are doing. In this case, we can also use that approach to see. So, as the thing is secured on a land and building, are you getting it? If the amount of distribution is not enough, it's up to you. You can still use the same amount and then explain why. Are you getting it? But somebody may also limit it to the, what do we call it? The 4005, right? Which is the land that it is secured on. Do you get that idea? But it doesn't really matter if you use the full amount too. It all counts anyway. But when we use it, then what do we get then? What do we get then?
The 9365.
This one would have given us what?
9365.
9365. Oh, then that means it could have fitted in the 70011, right?
Yes, sir.
And then you don't do it like that.
Okay.
Do you get what I'm trying to say?
No,
Yes, sir.
I'm trying to say, Sesikano and so on. Do you get it? If it's not up to, then you limit it so that the others can get some. Or it's not clear to you guys.
there's a day and so on.
Say assets na year ton 17011. And when you debate your liabilities. Say
Yes.
17011 now so your liabilities na. Then you can
Uh-huh.
limit the debenture to the asset because you can't so. Inti no say to me into your kana over family dino. Then fine, be family dino. Do you get it? Because I can't give you your full amount and the rest will not get some money. So rather come and take the land and build it. Doesn't make sense.
So between the 7,875 and then the value of the building itself, which is 4,005.
Yeah.
Which one are we to pick?
So that means that you see the debenture, you see this 4,005 way no. That will be the debenture that is secured. Do you get it or it's not clear? It seems
Yes.
you understand.
So
Set debenture and the value near saying. How much was the value of the debenture from our calculation? Is it not 7,875?
yes,
But how much of it was secured?
that's the 4,005.
4,005. So how much of it is unsecured?
That's the remaining.
That's the remaining. That's what I'm saying. So Oceana Sikana ends one. You can do it like that. But some people can decide to bring the whole full amount here. But that is the appropriate way to do it. Does it make sense now? Or it's still not clear to people?
Okay.
Yes,
Yo.
yes.
Is it clear? See, if I liquidate today, you will come and take my land and building. And what's the value of the land and building? Is it not 4,005? If I
Yes,
cannot
sir.
pay, is that not the amount I will pay you?
Yes.
Yeah, so that means that amount is secured. Assuming I can't pay, I will give you the building, which is secured, 4,005. But what about the rest of the money? Is it secured or is unsecured?
So it's unsecured.
It's unsecured. And so far as it's unsecured, it should be part of our unsecured liability. Now
Okay.
that makes sense now.
Okay.
Yes. So in that case, what do we get for our unsecured liabilities now? What does it become? We had 22% debentures secured 4,005. And then we had what? Liabilities with floating charge. How much? Liabilities with floating charge. So yes, 5,350. So this one plus our 5,350. 5,360.
9,365.
That's 9,365. Let me 9,365, right? So if we take it, how much is available for unsecured liabilities?
7,646.
7,646.
46.
Okay. So now that you have this 7,646,
Boarding in progress.
Unsecured liability. What were our unsecured liabilities? What and what were unsecured? Now we know that the 22% debenture, there's a part that is not secured, right?
Mm-hmm.
Which is worth how much? That's the difference also.
Yes.
The value was how much? 7,875 minus our 4,005. That's 3,870, not so.
Yes.
The value was 3,870. Okay. 3,870. Then we had what?
Trade payables.
Trade payables. With balance of how much?
4650.
4,650. Then we have what? Sundry creditors also.
Yes.
Also with balance of how much? 1,060.
1060.
When you add all of them, do they fit in this? Or they are more than that? They are more than that, right? That's about what? You get 9,580 also. So you can
Yes.
that calculation separately. Then you take each one and use it to apportion this. Do you get it? So let's see. So that means if I take 22% debenture, also the portion that I lost, how much would I take? The value that we had was what? 3,870 also. So we take 3,870 out of the total 9,580 times this 7,646 that we are trying to what? I get it. So that's how you do the pro rata. And this is the type students do not like. That's why I'm showing you how to do it. So this one, you take your 4,650 and then divide by what? 9,580. Here to take your what? 1,060 and divide by what? Your 9,580. Not so. By 7,646 by 7,646. That's why I said the debenture criteria is up to you. You can choose to do it this way or do it the very first way. Just bring the full amount there and only apportion trade payable and sundry creditors. It's up to you. So what do we get? Which means that whatever will be left to be zero. Not so, because we are sharing all. So that means the amount that will be available to ordinary and preference shareholders will be nil, right? Because we have shared all for the liabilities. Those people have to bear with the loss. True or false? Does it make sense now?
Yes.
I'm only hearing yes from one person. Is everybody okay now?
Yes, sir.
Okay. So what then do we get? That means now our debenture, the unsecured part, will be 3,000 and what? 88, maybe. Then this one. We have 3,711. We have 846. And this allocation that we've done, it will give us 0, right? So we've shared for all of them. Have we shared for all of them?
Sir, the last one should be 847.
Okay. 847. Okay, now that we have this, we know that the shareholders are losing, preference shareholders are also losing. Let's look at the position on their position on liquidation. Okay, what's their position on liquidation? Okay. So how much would it be? So we look at the particular stakeholder. Are you getting it? Look at the particular stakeholder in question and look at how much he lost on liquidation also. Loss on liquidation. So let's start from the top. Ordinary shareholders, did they lose? How much did they lose on liquidation? Did they get anything at all? Ordinary shareholders, did they get anything at all?
No.
Nothing. Okay.
That means they lost all their 13,500, not so.
Yes.
Okay. Now what about preference shareholders? The question also said they didn't get anything. Per our calculation, it was 0-0 for all of them, not so, because it only ended with the liabilities. That means they also lost all their 4,125. Do you all agree? You know where I'm getting
Yes.
it from? Because stated capital was 70 what? 625. And the breakdown of it is made up of 13,500, not so, and then what? Okay, so they said no dividend was also declared on preference shares for the year ended 30th September 2016. That means this year no dividend was declared, meaning that we are owing preference dividend. We have preference dividends in arrears. Do you guys get it? See, preference shares, see, it is 20% cumulative preference shares. It means that dividend will be what? Is it not 20% of the 4125?
Yes.
So how much would that be?
825.
That means that 825, have they declared and paid during the year?
Declared but not paid.
It wasn't. They said no dividend was declared on preference shares. So it was not declared at all. But it's owing, right? Because preference share dividend, every year you are supposed to declare and pay. I get it, meaning they are still owing preference shareholders dividend, right? So we say what? Preference dividend in arrears. Did they get something on dividend or they lost? Did the preference shareholders get their dividends or they lost the dividend in the year?
They lost it.
Even on liquidation, right? They didn't get anything for their dividend, so they lost. Now, what other liabilities did we have? Other stakeholders. We have the bank. Did the bank lose anything? Bank loan. Did they lose anything? Or we were able to settle all?
We paid all.
We were able to settle all, so they didn't lose. The debenture holders didn't actually lose, but they only lost on the unsecured part. That's why mostly, I prefer not to use this approach. I prefer to work the total debenture, because if bank loan is not losing, then why should debenture people also lose, right? They can't lose because yes, it's even the fixed charge, but anyway, it's still correct. This one, there's no one right way. That's what I want to put to you. You can massage it your own way. So far as it balances, you are good to go. But we want to see how it balances. So the debenture, remember that the fixed part of the debenture, that place we are not owing them, but only the what part? Only this part that they lost, right? Remember, here they were supposed to get 3870, but they only got 3088. True or false?
True.
So how much did they lose? 3870 minus 3088. That should tell us how much the debenture holders lost, right? On their unsecured part. That means they lost 7 what?
782.
Okay. Are we okay? 782. Then what else? What other people were there? Trade payables. Trade payables, did they lose something? How much did they lose on liquidation? Trade payable. They were supposed to get their money of 4650, but they only got 3711. True or false? True or false?
True.
So how much did they lose on liquidation? Please, this thing is not difficult. Just flow with it. How much did the person lose? Just calculate and put it down. So 4650 minus 3711. He lost 939, right?
939.
Okay. Then what about sundry creditors, right? They expected to get how much? 1060, not so. But they ended up with 847. So 1060 minus 847.
213.
So they lost 213, right? Out of their total investment. So if you put this together, what is the total loss on liquidation that we expect? What's the total loss on liquidation? Total loss on liquidation. That's 20,384.
Yeah, that's correct.
Okay. So now we've got each stakeholder and their position, right? So now that we've got each stakeholder in their position, now we need to know the amount of capital reduction required. How much loss are we going to make, assuming we didn't liquidate, right? That's the loss we try to turn around to create the scheme. Okay, because if we know our current position, then we can turn it around, true or false. So with the statement, the second thing, or let's say the third thing we are supposed to do is that we need a statement of maximum loss. And this is where all the marks are when it comes to designing of scheme now in ICA exam, right? The statement of maximum loss or the amount of capital reduction required, right? These I hope you are all following. So we first did liquidation, then we shared the liquidation loss, not so. Then we determined the loss on liquidation. Then now we have to know the amount of capital reduction required. If we didn't liquidate, the first part was liquidation. So here is, if we didn't liquidate, what loss are we going to make? That's the loss we try to turn around into profit. Makes sense. So this one, what I want you to do is that first, assuming we are going to continue, go and find all the going concern values and bring all the carrying amounts of the assets and liabilities or the book values, not so. And then you are going to get a gain. Let me put all the gains in bracket and all the losses, don't put them in bracket, okay? It depends on how you want to go. So because I'm working for losses, I make the losses positive and the gains, I make them negative. Are we okay? So that we can get them. So how do you start? So I can start with what? Gains or losses on my assets. Are you getting it? And liabilities. That's what I'm going to start with first. So let's copy all our assets first, the same way. So freehold, land and building. What was the carrying amount? You just copy it from the balance sheet. It was 3788. Not so. Then plant and equipment. Please be giving me the figures. 7020, right? Then we have furniture and what? Fitting. How much? 3080. You know these are the carrying amount or the book values. The one in the balance sheet. Balance sheet values. Then we have what? Investment also. 2300 also. Then we have what? Deferred what? Development expenditure. I hope you are all following. What's the book value? 7050. Do we all follow?
Yes,
Okay,
sir.
sir.
Then the patent rights. Patent next 42, not so, on the balance sheet. Then we had inventories, not so. Inventory next 3510. Trade receivables. And 1006, not so. But be careful. The cash, you can't get a gain or loss on cash. Cash cannot be revalued, right? Because all these assets can be revalued because all of them can suffer impairment. Now that you have these ones, what I want you to do is now get all the going concern values or what the values will be if we are supposed to continue running the business. So if revalued amounts are given in the question of going concern values, you pick. But here we didn't have any, right? But we only had what? The net realizable values, right? So we just picked them like that. So land and building was 4005. No, so this guy, plant and equipment was 3750. Furniture and fitting was 2800. No, so investment, they said it could be sold for 1350. No, so. No, so. And then following further feasibility study, the deferred development expenditure was nil. It doesn't have any value. The patent rights, they said they could sell it for 1008. And also inventory too, they said it's supposed to be written down by 2232, meaning its value now will be how much? 3510 minus 2232. That means the inventory's value now is going to be worth 1278. And trade receivable had no value, meaning it is still worth its original 1006. Not so. So just subtract the going concern values minus the carrying amount. If it is more, it will be a gain. If it is less, it will be a loss. And I told you all the gains should be in bracket. Not so. Do you all agree? Is it understood?
Yes, please.
So in that case, this one we have a gain of 217. So I put it in bracket. This one we have a loss 3750 minus 7020. We have 3270, a loss, right? 3270. There's a loss that we'll have on our assets. We have 283080. We have 280, also a loss, positive. 1350 minus 2300. We have 950, a loss, positive. This one 0 minus 750, a loss of that. Then we have 1800 minus 4200. We have 2400, right? Another loss. We have 1278 minus 3510. 2232 loss. And we have no loss here, right? So these are gain or maximum loss from assets, right? Maximum loss or amount of capital reduction from assets. So maximum loss from our assets. So what was the maximum loss that came from our assets? Let's add and let's see. 217 plus 3270 plus 280 plus 950 plus 7050 plus 2500 plus 2232. So we have 15965, right? So this will give us a maximum loss of 965 from our assets. Then we have maximum loss from other activities or other items. So I can start because of space. Let me just start with my maximum loss from my assets, right? How much was it? What was the maximum loss that came from my assets? We had something. 50965, not so. So we take our 15965. Then we have other losses that we have, right? Because here, once the company is not doing well, that means all its reserves are gone, right? So we go and check if there are any reserve. We write all the reserves off because we are starting a new, it's like you are wiping the old things off to start a new one, right? So any other thing that we need to deal with, who can tell me something we've not dealt with yet? Remember that there were some preference share dividends that we haven't been able to pay. Not so. How much was it? Preference dividend in arrears. There's also a loss to us, right? So what's the preference dividend in arrears? How much?
825.
So it was 20% of 4125, not so. That one was what? 825. To go and add up to the loss. Then remember, we had income surplus, not so. Income surplus is in a loss position. It was 5844. So income surplus of 5844. Then we have capital surplus. Capital surplus was positive, not so. Since it was a positive reserve, it will come and reduce this total loss, not so. Of how much? 2250. Okay. Now, anytime you see reserves when you are doing maximum loss, clear all the reserves. Income surplus, capital surplus. So far as they are there, they will either reduce or increase your what? Your maximum loss. So now what becomes our total maximum loss? Wow, a coincidence.
Bill,
Yes, boss.
I'm not clear with why you are deducting the capital surplus.
No, capital surplus, you see, the old entity is gone. Once you are doing capital reduction, it means the old entity is gone. So all your reserves should be cleared away. So remember, all these things are losses. Capital surplus was positive, right? Meaning it's a gain.
Yes.
So because it's a gain, that's why I put it in bracket here. These ones were losses. That's why I left them like that. However, you can do it the other way around so that this one, when you finish it, will be in brackets. It's up to you. Makes sense. Is it clear now? Anytime you are doing capital reduction, all reserves, income surplus and all other reserves must be cleared out. Please have, is that okay? Because we are starting the company from the ground up again. So all the reserves must be cleared out so that we know the total loss that the company has now that it has not liquidated. So that we know how to what? Satisfy our stakeholders based on this loss that we are having. We will share for our stakeholders.
Okay.
Are you
So
okay?
you are saying capital surplus was originally positive.
Yes,
So
remember
now,
that. Remember, look, when you come here, freehold property, what was it? Was it not a gain? It was 3788 and it became 405. There was a revaluation gain, true or false?
yes, true.
But why did you put it in bracket? I told you, you put all the gains in bracket because usually the gains are smaller than the loss.
Okay.
That is why I put them in brackets. Everything else here is just a loss, right? And capital surplus too is a gain. It was positive and retained earnings was negative. So you see, because it was positive, because I'm recording all the gains in bracket, you see, I put that one also in bracket.
Okay.
That's all. It's not that it's not negative. I just want to get a loss. That's why I did that. Is everyone okay now? Is everyone okay now?
Hello,
Yes,
Prof.
sir.
Hello, Prof.
Yes, boss.
Yes, boss.
Yeah, Prof.
Yeah, Prof.
I'm not also clear on the preference share dividend in arrears.
Yes, boss.
When we were doing the position on liquidation, we added that to the other losses that we incurred, but we added in calculating the maximum loss, we added it to the maximum loss, but we did not deal with the ordinary share and then the preference share itself. I'm a bit confused.
No, we are now, no, this is maximum loss that the company is incurring. Like expenses and income that they will incur that will result in a loss. Now that we've got that, we are now coming to share for them. Do you get what I mean? So once you get the maximum loss, you are now coming to share for your stakeholders.
Okay.
Do you get what I'm trying to say? So
Okay.
here we calculated our maximum loss. We are now coming to share. I get it. So now we are going to say what? Share of maximum loss. Are we okay? So share what? Of maximum what? Loss. Not so. Okay. I get it. So I would look at on liquidation, what they got on liquidation, and what I expect them to get on reconstruction. Do you get the idea? Based on our maximum loss, because the maximum loss is the first step of our reconstruction. Okay, so let's see. Let's take our stakeholders here. What stakeholders did we have? Ordinary share capital. Ordinary shareholders. How much did they lose on liquidation based on our liquidation statement that we calculated? They lost all their 13.5. True or false? So
True.
on based on the scheme you want to carry out. For me, I always do it the same as the liquidation unless some few values that I can adjust. So look, since they lost 13.5 on liquidation, I want to go simple. Somebody will say, okay, these people should only lose 50% of their value. So this place is up to you. It's flexible. You can apportion it anyhow. But I go simple. I say, okay, since they lost 13.5 on liquidation, then why not sacrifice the same 13.5? I don't mind. Does it make sense? Does it make sense?
Yes, sir.
Okay, then let's go to preference shares. Preference share capital or preference shareholders, they contributed how much? 4125, not so. They lost it on liquidation. So why not lose the same 4125 again on reconstruction, right? Now, the preference dividend in arrears, not so. They lost their 825. So me here, I'll let them still lose their 825, not so. Are you all following? Then we come to the 22% debenture. 22% debenture, no. On liquidation, he lost how much? You see saying. We only lost 782, meboa.
Which one?
But on reconstruction, I don't want them to lose anything. It's up to me. It's the way you do your question. Do you get it? Do you get it?
Yes, sir.
So this one is flexible. Why would me pick up a crab any the same? They should also lose 782 here. It's up to you. I get it. Then I can say what? The bank loan. Bank loan on liquidation, they didn't lose anything. So on reconstruction, I don't expect them to lose. Remember, reconstruction should always give them a better what? A better bet than if the company should have been liquidated. You get it? But these people had already lost. So I just tell them, okay, sacrifice everything you have. But when I'm designing the scheme, I will make them contribute money or I'll convert some of their shares to capital or whatever. Are we okay? But for now, this guy didn't lose. Bank loan never lost. So here I didn't make him lose. The venture, so I didn't make him lose. That means I must find a way to take care of this 782 loss in my account. Makes sense. So in that case, maybe I can decide to what? Pay some 782 off or pay the whole debenture. I get it. Pay the whole debenture off in my scheme. I get it. So that they do not lose anything completely. I hope that makes sense. So it's up to you. Bank loan didn't lose, so don't make them lose again. Then what about which other stakeholders are there? Trade payable, right? Trade payable, how much did they lose? Remember, this one, when we add all, this one gave us 20, what total loss on liquidation? 2384. Maximum loss to was 2384. It's just a coincidence. It's mostly not possible. 2384. Here too was 20 what? 384. Not so. Okay. So let's see. Trade payable. How much did they lose on liquidation? They lost 939, right? 939. And this guy, sundry creditors also lost how much? Sundry creditors. They lost 213. Okay, so 213. Okay. So now that we have, so we must find how much they must lose on reconstruction. How much should they lose? It's up to you, right? But it shouldn't, their loss should not be more than what they would have lost on what? On liquidation. You get it? Because everybody must be okay. So you see the one who lost, the debenture holders who lost 782, I decided to not make them lose. Not so. The trade payable who lost 939, I can find something for them so that they will not lose. You get the idea? So now, when I sort of deduct all this from the total, what am I left with? When I deduct all this from the total, what am I not left with? Whatever I'm left with, I'll share for these people to see how much they are supposed to lose on capital reduction. How much is that? 13,500 plus 4,125 plus 825. That means that's 18,450, right? Meaning if I add all of this one, maximum loss I've shared, I get 18,450. Now this 18,450, I'm now going to apportion for these people based on the maximum loss that I have here. Not so. So how much is left for the maximum loss? If this is 18,450, that means I'm left with an amount of how much? That means
19.
19 what? 19 what?
31.
That means I'm left with 1931, which I have to share for these two guys here. I get it. So you take each one's value, then you try to share for him. I get it, that 1931. So this is what I will do, because now I know that I have some 1931 here as the remaining value of the 2384. What I can do is that I can decide to take this 939 over the total of these two. 939,213. 939 plus 213 also, which gives us 1152. So this 1152, I take 939 over the 1152 times You said the other one was one what? It just escaped me.
931.
I take it out of the 1931 to get what should be here. You can still repeat the same thing. I told you this place is flexible. Somebody can say, okay, ordinary shareholders should only lose 10,000 on reconstruction. Preference shareholders should only lose 3,000 on reconstruction. Preference dividend shouldn't lose. Are you getting it? They should only lose maybe 800 on reconstruction. So it's up to you. This place is so flexible, and no matter what you do, it will always balance, right? If you do it well. So let me show you. We can convert every figure here and change it. I get it, but I prefer to use the same value so that I'm on the same page. I don't complicate issues. Some people complicate it, right? It's a very difficult scheme. I don't like that. I use the value here, take it over the total, and now multiply. Also by whatever is left after allocating for ordinary shares, preference dividend. Are you getting it? So now how much do I get for this guy? Mm-hmm.
1573.
1573.
Okay. 73.
573 is quite big. Because that means what they are losing is more than what they lost on liquidation. And the other guy will be what?
Hmm. 358.
They are losing more than they are losing on liquidation. So they will not agree. Do you get it? And that means you are, despite this loss that they are going to lose, you have to give them something better. Do you get it? So maybe you are going to pay a portion off so that they only lose this amount. It's okay with you, and you convert some portions to shares. It's up to you. It's so open. You get it? So now when you add, does it add up to 2384?
Yes, sir. It does.
Hello, Prof.
Very different.
I got
Hello.
2381. Yes,
Yeah,
but
yeah. That I was about to tell you the total. Right? I'm also getting more than. I'm also getting 2381.
yeah, that's what I also got. So this one should be 213 over 1152, not so times 1931. If that is what we have.
That figure should be 18450.
Which figure?
Oh, please let me confirm. The 1935.
The 1931.
Yes, please.
Or better still, if we don't want to stress anything, right? I will just do the same position. These people should lose the same thing, right? Bank loan shouldn't lose. This guy should still lose his 939. This guy should still lose his 213, right? It's still, you can still use the same thing. I told you this place is so flexible. You can do anything so that we wouldn't stress. Just keep it that way. So whatever you lost on liquidation, I gave you the same thing. But apart from that, I would pay you quickly, which may be the same as liquidation. Because of time, you still have to get your max, but you can give them something small. Maybe they should convert a part to ordinary shares or something. It's up to you. I get it. Or you don't get the concept I'm putting across. Here, you can decide whatever figure you want each of them to lose. It's up to you. But liquidation was certain. That one, the loss, you cannot assume. It was actual loss. True or false?
True.
This one, you cannot assume. But here, you can assume everything. I can decide to give shareholders 10,000, give preference holders 2,000, give the loss you decide. That's why here is very interesting. Do you get it? Does it make sense? Does it make sense now?
Yes, please.
Okay. So now the thing is that now that you have been able to share the maximum loss, now you must ask yourself, okay, how do I satisfy these people? By all means, I need to turn the company around. So who is going to contribute money? And what am I going to use the money for? Okay. So the next thing you have to do after you share the maximum loss, I think we had what? 3, we have 4 here. Now we go to 5, which is what? The sources of our funds. That's receipts and payments, right? So payments and receipts. What do we need to pay for? And what receipts are we going, where are we going to get that money? I get it. So payments and receipts for the reorganization. So the question is, now it's up to you. This part you are going to answer. What do you think we should pay for? I get it. And where do we raise the money? So let's look at what we are supposed to pay for. What do we need? Always, there are some things that we need. What do you think we need in this question? What do you think we should pay for? What do we need to pay for? By all means, we can buy new assets, right? Or what do you say? We can definitely buy some new assets. And I'm was saying, it's not good.
Yes.
What do you think we should buy? Can we buy new assets?
Yes, sir, we got more.
But because I don't want the shareholders, what do we call it? The debenture, what do we call it? The people who we decided that they only lose a portion, right? Remember, when we come back here, okay, these people, who are they? The debenture people, they lost some 782, right? So I can decide to pay off what? The whole debenture, right? And leave only 782. I get it, meaning they should sacrifice 782. Do you understand what I'm saying? Because if they are losing that, that means I should be able to what? At least pay them or do something or convert some to shares or something. You see, people are not getting what I'm trying to say. What I mean is the loss on reconstruction, if you are paying anybody, take out that loss because that loss is a sacrifice to you, the company. In Tiffany said, the debenture, how much was it? Debenture, was it not 7875? Was it not 7875?
Yes.
So if
Yes,
I'm
sir.
paying the person, I can't pay him the whole 7875. He's supposed to lose 782 for my company. Does it make sense now? Does it make sense now?
Yes, sir.
So now I can take this minus 787 and that gives me 7093. I want to pay off the debenture. So I'll say payments. I want to pay all the debenture off. So the debenture, I'm going to pay what? This one minus the loss, not so. Meaning that I suppose I can pay what? 7093 of the debenture. Not so. Meaning that this one is capital reduction for me. It's what? A sacrifice. He's supposed to sacrifice this because on liquidation, he will still sacrifice this. I hope that makes sense. Does that make sense? What else will we pay? For me, I want to pay off this the trade payables, right? Trade payables, I want to pay them off. Also, that one too, if I'm paying them, note they are sacrificing 939 of their amount. Also, so trade payables, I was supposed to pay them 4650, but because they are sacrificing 939, I'll take the 939 off because it's a sacrifice for me. So how much would I end up paying them? This one is up to you. Some people can choose to pay off only one liability. Some can choose to pay off all the liabilities, but always make sure you leave at least one liability down. Do you get it? Always make sure you leave at least one liability what? Down. Makes sense?
Yes, sir.
Yes. So it's up to you. Okay, and that'll give us what? How much do we have to pay for trade payables? So somebody can say that, okay, trade payables, let's only pay half. It's up to you. How much?
3711.
That means I'm paying them 3711, right? Because they are sacrificing what? 939 to my company, right? Now, when it comes to the sundry creditors, if I like, I'll not pay them because the bank loan, I can decide to not pay off the bank loan, but they will be angry. Why? Because on liquidation, they didn't lose anything. And here, why are you letting them lose? So if I like, I can still keep the bank loan. It's up to you. You decide. So here, I'll decide to keep the bank loan or convert a portion to share capital. It's up to you. It's so open. That's why I say these questions, they are so open. Every question is different in its own way. So maybe I will decide to still keep the bank loan, right? So that interest will keep accruing. They will want that, right? So that I'll keep paying them interest instead of paying them off. So I'll just pay off the sundry creditors, right? How much am I supposed to pay them? Sundry creditors. Originally, I'm supposed to pay them 1,060, right? But how much did they lose on reconstruction? They are supposed to lose 2 and 3 for me. Meboa. True or false? True or false?
True.
So 2 and 3 must be sacrificed for me. So in that case, 1,060 minus 2 and 3. That means I will pay 847 of the what? The sundry creditors. Is this the only payment I'm going to make? No. By all means, I'll buy some non-current assets, right? So how much do you want us to use to buy new assets? So this thing is totally up to you. How much should we use to buy new assets? Then we need something we call working capital requirements. Our working capital requirement is our cash. How much cash do we need to, monitor the business or work around the business? How much cash do you need? So this cash, these things, they are all where you can use your own figures if the question is silent. But in this question, they gave us their own working capital ratio that we are supposed to use. It was somewhere. See, they are telling us that the ratio of our accounts receivable and cash to current liabilities is 0.8:1. In future, to trade satisfactory, that means it should be what? 80% of our liability. So if our liability is 800, then our current assets are 800, then our liability should be equal to what? 1,000, right? That's the rule they've given us. So they are saying that our account receivable and cash to our current liabilities should be 0.8:1. You get it? So they've told us that what? Our current ratio, not so, our current ratio, quick ratio, sorry, because inventory is not part. They are telling us that our quick ratio to current liability, quick ratio, remember, current ratio is what? Total current assets minus what? Over current liabilities. But when I say account receivable and cash only, that means I am talking about what? Less inventory. True or false?
True.
Now, how much bank loan did I leave over? I left the whole bank loan, right? I didn't convert it. Since I didn't convert the whole bank loan, that means that the bank loan is now my liability. So how much do you want us to raise as capital to pay all our payments? It's clearly up to you. It's so open. How much should we raise as capital? How much should we raise as capital?
10,000.
How much?
10,000.
No, our payments are even more than 10,000. See, we are paying debenture, we are paying trade payable, we are paying sundry creditors. So let me just put maybe 20,000 here, right? So if 20,000, I know that I may need to purchase some new asset, but I can get my working capital requirement. So let's go and work for the working capital requirement and see. So working capital requirements, right? Which I told you is the cash after the reconstruction. So let's see. Now look, per the question, they are telling me that my quick ratio should be how much? They say how much quick ratio should I leave over?
0.8.
0.8 is to 1. So they are telling me that when I have 0.8 current assets, my liability should be 1, right? So now what is my liability? My current liability I left over was what? I left over was my bank loan, not so? Not so.
Yes, please.
And that bank loan, the value was how much in our books? 5.3 what? 5.36. Not so. So look at this. If our current, if our liability is this, that means that look, 0.8, because it's current assets over current liabilities, right? 0.8 over 1, not so, is equal to current assets over what?
Current liability.
Current liability.
True or false?
Yes, sir.
Yes. So this one was current liabilities, current asset minus inventory. Remember, it's quick ratio. That means inventory is not part. That's receivables plus what? Cash. Remember? So receivables plus cash over current liability. Okay. So now, if we are to work this, we know 0.8 equals what? Receivable plus what? Cash. All over what? The 5.3 what? 60. Not so? So we can work it out. That's how I do mine. People have different ways of doing this. So we are saying that, okay, my 80% of my liability should be equal to my receivables and cash. Not so? So that means you have to cross multiply, right? That means our receivables and cash figure is going to give us what? 0.8 times 5.3 what? 60. That gives us what? 0.8 times 5.3, 60.
288.
That means our total what? I get it. That means our total receivables and cash should be worth what? 4288, right? Okay. So now that it is 4288, now that it's 4288, let's go and check and see what our working capital requirement will be. Now, see, if we are getting our quick ratio or we are getting our assets here, please, I have just taken time. If you get this concept, when we are solving another question, you see it now makes sense. So you just relax. If you don't even get it, you relax. Just get the concept I'm putting across. Now, I know current assets now, okay? Based on what I'm giving, I know that what? Receivables. Receivables that I calculated in the question was how much? How much receivables did we get? The receivable, the going concern value was how much? 1,006, not so? So we are saying that 1,006 plus cash, which we don't, okay? When we add it together, we said it should be how much?
4288.
Receivable is 2688. Yeah, cash is 2688.
So that means our balancing figure should be the cash, right? You get it now? So that means
Yes.
our balancing figure is a working capital requirement, not so? Which is what?
2688.
Because this will give us what? 4288, right? Which becomes our receivables plus cash. You get it? So we worked it from our liability. That if liability, this is current assets to our liability, receivable plus cash, all of our current liabilities, then 80% of that liability should be equivalent to what? my assets, not so, which when I did, I had 4288, meaning when I add this, this should be equal to receivable plus cash, not so. Now we know receivable, but we don't know what the cash balance will be. So if you add the two, the difference is what the cash balance will be, right? That means our payments that we are supposed to make, working capital requirement or cash should be 26 what? You said it's 2688, right? That means how much must we spend in buying new assets? That becomes a balancing figure, not so. So you see how I do mine. So what becomes your balancing figure now? 7793 plus 3711 plus 847 plus 2688. Minus 20,000. That means I must spend 5,661 to buy new assets. Not so. So now I know that new assets must come on my balance. It's not required that you have to buy new assets. It's up to you. Okay, so whichever way you are creating your own accounting, that's what you are doing. Now, where should we raise this 20,000 from? Remember, where should we?
The 20,000.
You said no, it's not
Are
there.
we-
This capital, I'm saying that this capital requirement, right? You see this capital requirement, it's up to you. I can decide to put 100,000 here and just find figures to match the 100,000. Okay, I decided to pay off the debenture. If you like, don't pay the debenture. If you like, pay bank loan off, but always make sure you leave at least one liability. Makes sense? So that you can look, assuming I paid off all the liabilities, could I be able to generate the working capital requirement calculation? Assuming I paid off all the liabilities, can I get the 0.8:1?
Oh.
No, so you must leave at least one. That's why I'm telling you, this is not anywhere in any question. We can equally make this 15,000. Let's try that one too. You can even, this thing, it's even the easiest among all questions because it's freestyle. Capital reduction has always been freestyle. Please don't, some people immediately they are not getting it.
Liability did you leave out?
Is that?
Which liability did you leave?
Oh, remember, okay, look at all the liabilities. Which ones didn't I pay off? Which one didn't I pay some? Look on the balance sheet in front of you. Did I pay trade payable? Did I pay some of the trade payable?
Yes.
Did I pay sundry creditors?
Yes.
Did I pay the debenture?
Venture, yes.
So which liability there haven't I paid?
A loan.
Only the bank loan. So I left it because I needed to be able to get my cash requirement, which is the working capital requirement. Makes sense.
Okay.
So I can decide to even make here 15,000. If I make here 15,000, then that means how much would I spend in buying assets? It will change, right? Let's see. What would that be? That's why I'm telling you, whichever way or whichever figure you put there, even if you put 1 million there, you will know how to go about it, right? But this one, you always have to go and work it. If the question is silent, you can put your name here, anything you put here. But this one, they actually gave us the what? The working capital requirement ratio. That's why I went to do it. If not, you can decide to put anything. They can decide to put 1, 2, 10,000, anything. What I'm trying to sell to you is that these things, they are open, right? You can do anything and you'll be marked correct. That's what makes this fun. But students don't rather like this. So if I make it 15,000, then how much should I use in purchasing my assets? Let's see. That means I should buy new assets worth what? 661, not so? Yeah, so it's up to you. So you can make it 30,000, you can make it anything, depending on what you want to do. Somebody could have equally left the trade creditors rather, right? And then he'll use that to do his working capital. It's up to you, but make sure at least you leave one liability. Is that okay? So now you are saying that these are the things you want to pay. Now the question is, where do you raise the capital? If these are the payment, where am I going to receive the money from to pay these 15,000? Meaning that the receipt I must be receiving must be up to 15,000. Do you get the idea? These are the things I want to pay, but where should I raise the money from? Which people do I have in the company who can raise money for me? Let's see people I can raise the money from. First of all, shareholders will always be willing to bring money, right? So let's give them a right issue. So shareholders should contribute. How much of the money should shareholders contribute? So if you like, you can make them contribute all, but it's not fair. Check the question and see if there are some things you can sell. What are some of the things in the question that could be sold for money? So that we can sell some of. You can decide to sell your freehold land, rebuy it. It's up to you. It's so open, right? You remember that somebody has proposed to buy our investment, Meboa. So why don't we sell it? Make sense? Or you are not getting what I'm trying to sell across. Anything that has been decided to be sold, we can sell it and receive money from there. True or false?
True.
Now they've proposed to buy our investment. Don't we sell? So what was my original cash balance? By all means, I had some cash in my books. How much cash was I having? Cash on hand. That one should be part of my receipt. How much cash did I have on hand? 428. I had 428, right? Okay. But then I have decided to sell the investment, right? So sale of investment. How much would I sell the investment for? They said the investment should be sold for how much? The question, how much would the investment be sold for? They said we'll sell the investment for how much?
1350.
They said we'll sell it for 1350, right? And the directors have also decided to sell the patent for how much?
1800.
So sale of patent, right? 1,000 what?
800.
1,800. Okay. Nice. Then what else? Was there any reconstruction costs? Nothing. There was no reconstruction cost, right? So if you like, you can create some, but it's not necessary. So these costs that we have, right? If I want, I can say that, okay, the rest, all the rest should be contributed by our ordinary share capital, right? So, but remember, all the other shareholders should be better off in some way. So this is what I'll do. I did a simple one. Then when I designed the scheme, I'll now say that, okay, the preference dividend that they have, let's turn it into ordinary shares. It's up to you. So that one is all your own game, right? So I can go simple. So now these values was when you add it up, how much do you get? Then I'll say that the rest should be contributed by the ordinary and the preference shareholders. So the total is 3,758, but I need 15,000, right? So I can say that, okay, ordinary shareholders should contribute 10,000, right? So I'll now say what? Share capital, not so. Or ordinary shareholders, they should contribute what? 3,578 of the capital. Hey, said 3,578. They should contribute how much? 10,000, right? And the rest should be contributed by the preference shareholders. So these people should contribute 10,000, and then preference shareholders should contribute what? What's the balance? $13,578, right? So 15,000. So 1,422 should be contributed by our preference shareholders. So 1,422. So when you add all my receipts, how much will all my receipts be? Mhm.
15,000.
So you see, We needed 15,000. Where do we raise it from? We have cash of 428. We sold our investment. We sold our patent. Shareholders, ordinary shareholders, are you getting it? Also brought what? Also brought us some 10,000. The preference shareholders also brought 1422. So that we can raise 15,000 to go and pay off our debenture, pay some of our trade payable, pay some of our sundry creditors, buy some new assets, and also have cash that we can use to what? Operate working capital. You see, this finance. You see, these things, I just created them out of the sky, right? So if right now you decide to do a balance sheet, let's assume that with the information we have here, we decide to put together a balance sheet. Let's see if it's going to balance. Statement of financial position after the reconstruction. Let's see. So, assets. Let's see the assets we have. Freehold building. Freehold land and building. What's the value? Because we are still a going concern, 0.005, right? Then we have plant and equipment. How much? Plant and equipment. 37 what? 50.
50.
Furniture and fittings. Saying
2800.
2,800, right? So you say this is your total non-current asset. Then we go to current assets. Current assets, what do we have? We had inventory, not so. Now inventory had 3510, right? But we lost 2232. How much do we have left? 1278, right? So we have 1278. Receivables. We didn't lose anything on receivables, right? So receivables still remain 1,006 also. And cash. Cash, you're saying. We went to work
48.
out our cash, right? Working capital requirements. How much? Is it not 2688? Not so.
Yes, sir.
2688. Okay, so when you add up, what do you get? 1278 plus 1600 plus 2688. We end up with 5566. And this one gives us 408. The new asset. We're supposed to buy some new asset. Do you remember? Do you remember? We're supposed to buy some new assets. How much did we buy? Purchase of new assets. Per our calculation, how much did we need for the new assets? Per our, that we needed to pay how much? 661, right? From our working. Do you remember? So in that case, purchase of new assets, 661. So I put it here. So when we add all this, we should get our total assets. The total assets, you've been just saying 4005 plus 3750 plus 2800 plus 661 plus 555 5566. We end up with 16,782 as our total assets. We go to equity and liabilities. Now, ordinary shareholders or share capital. Share capital. How much did we contribute? They sacrificed the original shares and now they contributed 10,000. Do you remember? The capital we needed, they contributed 10,000 of it. Do you remember? Do you remember? Everything we are picking is from our own scheme, the payment and the receipts. That's all we are using. And all these things, they are just mind game, your own figures that you create. It is going to balance for you. So share capital 10,000. And preference, how much did I say preference shares should bring? How much did they contribute? The total receipts. No. How much did they contribute? Is it not 1422? Is it not 1422 they contributed? People are quiet too. Is it that you don't get it? Or it's clear? Remember, these are these new figures. No, tell me, are these new figures? Remember, these are the realizable values we see. If we are continuing with the business, that's what they will be worth. So we go with them, right? The inventory is the same figure, receivable, same figure, cash, we went to work for it, working capital requirements. That's another name for it. It's your working capital requirements, remember. Shareholders, remember, on liquidation, they lost everything. But now I said they should contribute 10,000 new capital. We had already sold the investment and the patent. This thing was worth nothing. The development expenditure was also worth nothing. Remember, the investment, we've sold it already. Deferred development expenditure was worth nothing. Patent, we've sold it. So you see, I didn't bring them on the balance sheet. Do you get it? And then the only liability that we had was the bank loan, right? So when you add the bank loan was a liability. How much? That's 5,360. No, so 5,360. Now, if you add the total, what do you get? For equity and liabilities, 10,000 plus what? Plus 1,422 plus 5,360. What do you get? Add it and let's see. Add it and let's see.
One 6,782.
Have we seen this figure somewhere before?
Say assets.
How come it balanced? We did guesswork, but didn't it balance?
It has.
Do you have any questions, or you prefer we take another one again? That's why I'm here for you. If you are just quiet when you do not understand, it doesn't tell me anything, because I'm here to help you pass. And if you don't understand something, then you are quiet. I'm supposed to be quiet. You that you don't understand, you are quiet. Then what would I do? If I don't know your problem, I cannot solve it for you. You get it? So if you don't understand, oh, say, regarding the payment and the receipts, why do we do this or why do we do that? Do we need to do this? Can I do that? Let me see, be more interactive. But it seems you guys are mostly just quiet and you assume the tutor to deduce that you don't understand. So if you don't understand, I don't know exactly which part is confusing or which part you need clarification on, or how is there any alternative that we can take? Let me know. But you just be quiet. It doesn't motivate the tutor to teach you. Because I'm here to solve your problems. That's the reason why you paid me. So if you are not bringing your problems, then how would I know which one to solve for you? Okay. So if you are not saying
So, Bill,
that means
what I would suggest is let's look at this same question. Just take us through from the beginning up to the end. Now that we know where we are heading to, let's start right from the beginning. I'm not saying go through in detail, but give us page by page how we're proceeding to the very end.
So the whole thing is, when it comes to designing a scheme, right? What you need to do is that they are asking you, is liquidation better than reorganization or vice versa? So what you have to do is that check liquidation to see what they will lose on liquidation. Check reconstruction to see what they will lose on reconstruction, right? And what they will lose when they are reconstructing is the maximum loss, which is the amount of capital reduction you require now, provided you didn't reconstruct, and provided you didn't liquidate, right? And I hope you all know how to do liquidation. Liquidation, everybody's clear on liquidation, yes or no?
Yes, sir.
So now, if I'm able to deduce what I'm going to liquidate for, that means I sell all my assets based on their breakup values or whatever values they are giving me for sale. I get in it. I'll get my total proceeds and then add all my liabilities and see whether they exceed all my total proceeds. When they do, you are now going to allocate your liabilities, right? Those with fixed charge, the cost of liquidation, any payables, preferential like SNET, payee, other taxes, right? You deal with them. Then if there's any liability with floating charge, you deal with them, right? That's the approach that you are going to do. Then the ones that are unsecured, the ones that do not have any floating charge or fixed charge by them, you apportion it based on the amount available, right? So once you apportion it, that means that is the amount that you can give them, meaning they are losing a portion of that amount. Do you get it? And once they are losing a portion of that amount, that means that's what they've lost on liquidation. So that means that at the end of the day, preference shareholders and ordinary shareholders do not have anything. So since they do not have anything, you are now going to look at their position on liquidation. What did they lose on liquidation? Now, if you look at the liquidation that I did, even as at the liability portion was zero, meaning ordinary shareholders did not get anything, meaning they lost all their 13.5 investment. Preference shareholders did not get anything. It means they lost all their 4,125. Preference dividends, we were owing them, right? They said the end of the year, they didn't declare, meaning we are owing them this 825. We haven't paid. Those who were the bank loan, if you go and check our liquidation statement, did they lose anything? We paid all the 5,360 off. Is that not so? But the venture holders, they lost something because we could only pay 4,005, and the rest, they needed their 3,870 balance, but we couldn't pay 3,870. We only paid 3,088 for them, meaning they had lost some of their money, right? And they had only lost what, 782 of it. The same way trade payables too. When we did the allocation, we only paid them 3,711, and these people 847, meaning they had also lost what, 939 and 213. Makes sense. So now that I've been able to do this, I now go and do my statement of what? Maximum loss. And all you have to do is compare what? Your going concern values with your carrying amounts, and also for their assets. Then the other ones, all the reserves must also be cleared as part of your loss, right? So your losses and any other preference dividend arrears, right? That is what you need to clear off, because they are all losses to the company. They are sacrifices. So what you do is that you compare your going concern value of the asset or the realizable values if they are given. But if you are giving going concern and realizable, pick going concern, because this one is when the business will continue to operate. But this question, there was nothing there, only the realizable values. That's why we used it as the going concern values. You compare to the carrying amount, right? I told you if it's a gain, I prefer to put it in bracket, and the losses, I make them positive so that the loss will show. But if you think you'll be confused, make the gains positive and make the losses negative, and then you get a maximum loss in bracket. You get the idea? Is it okay to everyone? So once you get your maximum loss for assets, you compare all the other losses, like the preference dividend in arrears and your surpluses, income surplus, capital surplus, revaluation surplus, translation reserve, anything on the account, write all of them up. So when you finish, you add everything up, you see that your maximum loss, I get it, which is like your amount of capital reduction. So literally, in simple terms, this is like your capital reduction account. Do you get it? That's why you see our accounts balance, because we have actually prepared a capital reduction account low key. This is a low key capital reduction account that we have done. Makes sense? Does that make sense?
Sir.
Yes.
So now that you've done this, you know that if I want to reconstruct, I must make people lose 20,384, which is the total loss that is available on the company now. See, if I start making losses, the accumulated losses, no 2384 way. So this 2384 must be sacrificed, or are you getting it, for the company to come back on its feet again. Make sense? So now how must we sacrifice it? That is where we come here and say, okay, this was your position on liquidation. What do I want it to be on reconstruction? And I told you here is freestyle, right? We can still work this same question again, and here I'll decide to make ordinary shares 10,000, make preference shares 5,000, make preference dividend 0, make 22 debentures 0, make these people 1,000, make this one 500. No, so it's up to you. Do you get it? That's what I've been trying to sell. But because they were the same figures, I just decided to maintain the same thing. You get it? So once you have been able to share the maximum loss, I get it. Now you come and decide what payments you want to make, right? And by all means, your payment will always involve paying off liabilities, buying new assets, and having a working capital requirement. Or if the company has some investment it wants to pursue, then you should pay for that investment. True. Are we not supposed to pay our liabilities? Please answer me.
Yeah.
Yes. And you know that in our capital reduction scheme, our maximum loss, we said what? Look at our maximum loss. We said what? Debenture, 22 debenture holders should lose how much on reconstruction? How much should they lose? How much?
782.
782.
782. But the question is, if they should lose this on reconstruction, what was their total balance? Is it not 7875?
Yes, sir.
So if they are losing 782, then how much should I pay them off? Because I want to pay them off. So how much should I pay them off?
The difference.
Which is how much?
7093.
So you could see that here I said, let's pay off the debenture holders with what? 7093. The same way these people lost 939. So I paid them the difference. These people lost 213 on reconstruction. I also pay them their difference, right? Then I'm saying that, okay, the question said that my quick ratio, right? My quick ratio, which is my what? My receivable plus cash. I getting all over my current liability. They are saying that they should give me 0.8:1. Not so. Is that not the question who gave me? Was it not the question? Was it not the question who gave me this? So if the question has given me this and all the liabilities, I pay them off except the bank loan, then literally they are saying that, okay, this 0.8:1 is equivalent to what? My receivables plus cash all over what? Because remember, current assets all over current liability. And I know my current liability now left is just the bank loan. The bank loan was 5360. So R plus C over 5360 is equal to a 0.8. That means if I want receivables and cash, they should add up to what? 0.8 times this one, right? Because we cross multiply. And that means you end up getting what? 0.8 times what? 5360. And that gives you 4288, right? So you are saying that 4288 should amount to what? Your receivables, which was what? 1600 plus cash. And the cash becomes the balancing figure. So 4288 minus our 1006 will give us what figure? How much would we get? And that gives us 2688 also. And this 2688 happens to be our cash balance that we have to keep. And this cash balance, remember, is the working that we have to go and work. You come and put it here as our what? Working capital requirement. That means the balancing figure should be how much you want to spend to buy new assets. So now, if these are the total payments that you are making, where do you want to receive it from? It's up to you. Okay. So I already had some cash of 428. I decided to maintain it. I sold my investment. I sold my patent. Somebody can say sell the freehold. Some questions to tell you the plant and machinery is not functioning well. So you can tell sell it, right, for this amount. So it will be a receipt. You have proposed to sell the plant. Now, ordinary shareholders, how much do you want them to contribute? I can make them contribute 500,000. It's up to you. I wanted preference shareholders to contribute something. So I just gave them 1422 so that they don't feel left out, right? So that gives me the total source of funds, which I'm going to use to pay all this. Also, when I finish, I propose a scheme, but because of time, you may not have time. So just give them their resultant balance sheet and you see it will end up balancing. That's all. Are we all okay?
Okay, sir.
You see, it's not difficult. Is it difficult? It is not too, but it's just that when I started, you didn't get the concept. It's very simple.
Better.
It's better now, eh? So before we
Yes,
call
sir.
it, let's see how you guys will analyze this for me. This one, I
Hello,
want.
Prof.
Yes, boss.
So in the exams, once this one is full of assumptions, how would the examiner know? Or you have to explain your
we write the
assumptions.
scheme. Yes, we write the scheme. So this is how you write it. You see all the things that you did. When you finish, you say the scheme is proposed as follows, right? So the ordinary shares would suffer most because they are the owners of the company and they will receive nothing. They should sacrifice all their 3.4 million, also of their capital, and leave what? This one said they should leave 100,000 as capital. But we left how much as capital?
Yeah.
No. How much did they introduce? They sacrificed their whole 13.4, and how much did they introduce as capital?
10,000.
And they introduced
1,000.
10,000. So that's your scheme. Preference shareholders, not so. They should sacrifice their 4 million and leave behind how much? How much did they leave behind? How much did they contribute?
1,422.
Yes, so that is it. This is the scheme. Debenture holders, They will suffer, this one said they will suffer 20 per CD of the remaining balance after they have been paid for this. I recommend they should suffer this, leaving debentures of that. So they decided to leave off debenture of this. But we said what? Debenture holders should be paid what? Should be paid how much? How much should they be paid? We pay them off something, some balance. Debenture holders. Pay them 703, right? So they should be paid 7093, not so, and the balance sacrifice for the company. You see, it's just the things you have done that you are explaining. Creditors. Creditors should be paid what? 3711, not so. Sacrificing 939 for the company, not so. This guy should be paid how much? 101, not so. Not so.
Yes, sir.
Yes.
Sacrificing what? Something. No, so and the preference dividend in arrears is to be waived. Do you remember? We waived it off. We didn't do anything with it. I get it. So they said, well, alternative recommendations are acceptable provided they are logical, reasonable, and in accordance with best practice. So you see, after their capital reduction, they decided that they didn't pay off any liability. They decided to maintain what? 5360, trade this and that, right? And they paid off only the debenture. So it's up to you. I didn't pay off the debenture. I didn't pay off these ones. Hey, I said I didn't maintain. I didn't maintain these ones. I paid them off, right? And only left the bank loan because I leave at least one liability. Does it make sense now?
Yes, sir.
So this is your scheme, just writing the things you have done. Ordinary shareholders, you can just adopt the same one. Ordinary shareholders should what? Sacrifice maybe 100% of their investment and introduce capital of 100,000 through a right issue of 1 CD each. Preference shareholders will suffer the same fate because they get nothing on liquidation. And therefore, they should sacrifice what? All their holding of 4 million and introduce additional capital of what? 1,422,000. You remember? Then we also did some things. Who could tell me what other things we did? New asset of how much should be purchased? Our own. We said new asset of how much should be purchased?
661.
661,000 should be purchased, right?
Yes, sir.
Then what else did we do? Who can tell me? The investment of what? The investment should be sold for how much? Should be sold for 1,350 as directors proposed. The patent should also be sold for how much?
1,800
as proposed. So that is my scheme. You see, the things that I suggested with my head is the same thing that I'm writing again. Is this thing difficult? Now it makes more sense, right, than when I was doing it. But you see, it's not difficult.
Yes.
So what are the steps that we followed? Who can remember? We started with liquidation. Then where did we go? Loss on liquidation.
We distributed the proceeds.
Loss on liquidation. Then we come to maximum loss, right?
Maximum loss.
Then what did we do?
We shared the loss.
Share of what? Maximum what? Loss, not so. Then what do we do now? Receipt and what?
Then payment.
And payments. Then the scheme also. So after this, you now draw a scheme. Then finally what?
Balance.
Your balance sheet also. And now you know how to draw the scheme. Just write simple language for them. That's all. So your liquidation, you share your loss on liquidation, maximum loss, share your maximum loss, you do your receipt and payment, you draw the scheme, and you prepare your balance sheet. Any question, or we should try another one?
Hello, Prof.
Yes, boss.
Please, I read in one book that in proposing the scheme, you can always add that income surplus and then the
Yes, of
reserves.
course. I forgot it. Income surplus and then if there's goodwill, income surplus and goodwill and the capital surplus should be written off, right?
Okay.
That's not what you wanted to say.
Yes, please.
Yes, we wrote them off. So everything you did, just write on it. That's all.
Okay.
Yeah, of course. Okay, so let's see this. Yes, boss.
Come again with that one.
No, you see, we wrote when we're getting the maximum loss, it's like the capital reduction. Didn't we write the surpluses off?
We did.
Even do you remember?
Yes.
Right, and you were even asking why we put the capital surplus there. Didn't we write it off?
Yes. Yes.
Yes, we did, right? So,
Mhm.
so you must
The
write it as part of
2,250.
that income surplus, and this should be written off. That's all. And the capital surplus should be written off. So let's look at HIPCO, right? So they are saying that for formulatory reasons, a capital reduction scheme, which in your opinion will be acceptable to the ordinary shareholders and the preference shareholders. Prepare a balance sheet after the capital reduction scheme has been effected. So let's see. So we have this balance sheet for HIPCO, right? And this question looks interesting. So we have all this, patent rights, whatever. And then they are telling us that what? You are informed that stated capital has this, right? 100,000 shares of no par value. And then we have 18% preference shares. Now, HIPCO used to be a profitable company, but for the past 3 years, the business has declined and the company has made net losses. Management has decided to reorganize the company and eliminate all unprofitable lines of activities. If additional capital of what? 130 million is introduced, it is estimated that the company will make a net profit of what? 25 million in the year ended 31st March 24, and a higher profit thereafter. So that means that now, if we want to get our receipt and payment, how much receipt do we need now? How much receipt will we need? Oh, my people. If we need receipt, how much receipt will we need?
130 million.
130, because they said if additional capital of 130 million is introduced, then it is estimated that the company will make a net profit of 25 million. That means that we need to raise about 130 million. So from where do we raise this? You get it? So they are saying that this is the worth of our assets. So they've given them down here. They're telling us that liquidation expenses will be 25 million if the company is wound up. The existing shareholders have hinted that if the capital reorganization scheme is satisfactory to them, they are prepared to introduce that 130 million we need. That means now our receipt can even come from only share capital. Makes sense?
Yes, sir.
Okay, and they are telling us that the patent rights were acquired years ago, not so when he took over another company, and it is now worth 60 million. Also, so now this is the question, right? Let's see if we can generate a reconstruction scheme. Now you guys get it, right? So now that you get it, what do we need first? You can decide to start with maximum loss or start with liquidation. So let's start with our statement of liquidation, right? You guys always know that's the approach, our statement of liquidation. So let's see. So statement of liquidation. What and what do we need? It was in millions, right? Or you prefer we work in thousands? Okay, so that it looks big a little. This small figures there. Okay, so let's work in thousands and see. So in that case, yes. What do we need? Our asset, right? Disposal proceeds. Okay. Give me the assets, their values. How much we need to put them up? So we list their names. We have what? Freehold LMB. We had plant and what? Plant and machinery. We have motor vehicles, right? We have patent rights. Also, patent rights. Well, this then we have stock, right? Stock. We have debtors, not so. But no cash, right? Okay, so that is it. So what do we do then? Let's go and check their values if there were any adjustments. Okay. So freehold, its value now will be 132, Meboa. Because that's what it is worth. Don't take the book value, so unless it doesn't have any value again, then you can use the book value. Plant and machinery is now worth how much? Is it not 53,000? Please be following, just be following and be giving me the figures. Motor vehicle, how much?
10,000.
10,000. So I know you are following. Patent right. Say that patent right. Look at the last paragraph. They were acquired, not so, but now it is now worth what?
60 million.
It is now worth 60 million. Okay. Then what else? Stock.
Look,
Worth 106,000. Debtors worth what? 5,000 also. Not so.
Yes, sir.
So this total proceeds from sale of assets. No, so total proceed from sale of all our assets. So when we sell all our assets, how much are we expecting to receive? To receive 132,000 plus 53,000 plus 10,000 plus 60,000
662.
plus 6,000 plus 5,000. 366,000, right? We expect to receive
Yep.
366,000. Okay. So what I will do is that I'll go to my balance sheet, and go and then add all my liabilities and see if they are more than that 366 before I know whether I'm going to do what, pro rata or not pro rata, right? Always check that. So we have 55 plus 125 plus we have 112 secured on our freehold land and building. Also, that gives us 292. Oh, thank God. That means we can pay off all the what? All our liabilities. Do you guys agree? Do you guys agree?
Yes, sir.
So if you can pay off all your liabilities, then that means the debenture, you don't have to limit it to the freehold land and building, right? Because we can pay all. I get it. So you say distributed as follows. Let me just go and do it at the back so that we have enough space. But I hope now it's starting to make sense. What's our total proceeds from realization of our assets?
366,000.
So total proceeds from sale. So we sold all our assets for 366,000, right? So if we sell all our assets for 366,000, then now we distribute them as follows. In what? Give me the format.
Fixed charge.
Liabilities with fixed charge, right?
Okay.
Okay, so liabilities with fixed charge. Liabilities with fixed charge. Did you have anything with fixed charge? Yes, we did.
Benches.
20% debenture, right? And how much? This one, since our liabilities were not more than our asset, that means the whole 112 can be paid off. Can it be paid off? Yes, it can. 112,000 also. Then we had liquidation expenses. Liquidation expenses, now you're saying. Look down there. Look down there. Liquidation expenses. Can you see?
25,000.
85,000. Were there any preferential payables? Did we owe anything like payee and SNIT?
Wow.
No, nil. Did you have any unsecured payables? Floating charge? You have any liability with floating charge?
No.
Yes or no? Do you have any liability with floating charge? Nobody's talking. No.
No, please.
Yes, please. Check. Look at your liabilities. Can you see your liabilities? Check. After sundry creditors, what do you have there?
Okay, bank overdraft floating charge.
So you see, bank overdraft was having a floating charge. So please, you need to open your eyes. Is that okay? So this gives us 125,000. Then did you have any unsecured liabilities? Did you have any unsecured liabilities? What was that?
Sundry creditors.
Sundry creditors. So in that case, liabilities with fixed charge, preferential payable, nothing, floating charge. Then we have unsecured. That's sundry what? Sundry creditors. How much?
25. 55.
5,000. So when you add all, how much would that be? We end up with what? 317 what? Thousand also. So how much will be available to ordinary and preference shareholders?
49.
Ordinary and preference shareholders. Said how much would that be?
49,000.
49,000. Okay, so how much is available to ordinary shareholders? Wow. Hey, preference shareholders, sorry. Preference shareholders, they have 120. Oh, see, their value is supposed to be 120. Oh, and ordinary
Okay.
shareholders are 423. Not so. That means preference shareholders, we can't pay them all. And
So then there will also be preference dividend.
yes, that means preference dividend was not declared, right? Okay.
Yeah.
That case, preference shareholders, they are going to only get what? So maybe preference dividend. Let's just preference dividend will be how much? Let's give that one to them first. The preference dividend. You can decide to give it to preference dividend. It's up to you, right? It would have been 18% of what?
120,000.
120,000. And that will be how much?
18,000.
It's not 21,600.
Yes, sir.
So
21,600.
right? Then available to ordinary shareholder, available to preference shareholders will be how much? If I take this out, how much is available to preference shareholders?
27,400.
27 what? 400.
87.
Okay. So you see their dividends there is very important. So I allocated the first portion to their dividend. Then the preference shareholders themselves, I gave them the rest of the money. Meaning ordinary shareholders didn't get anything.
Yes, sir.
So let's look at their position on liquidation and see who lost. So position on liquidation. Okay, so position on liquidation. Let's see. Stakeholder. Loss on liquidation also. So let's start with ordinary shareholders. Ordinary shareholders, they lost everything, right? They lost all their 423,000. True or false?
True.
Preference shareholders, how much did they lose? We were able to pay them how much? Only 27,400, not so. The overall value was 120,000, and we were able to pay them how much? 27,400, not so. Meaning, how much did they lose? They lost 92,600 on investments. Okay. Preference dividend in arrears. Did they lose?
Let me see the page before this.
We didn't make preference dividend in arrears lose anything, right? Because we allocated some of the 49 to them on liquidation, right? Then they themselves, their value, the amount left, we gave all to them. That means ordinary shareholders didn't get anything. However, the same way, you can choose to give all the 49 to preference shareholders, then you waive off the preference dividend. It's up to you. You get the idea. So whichever way you want to go. So now preference dividend in arrears didn't lose anything, right?
Yes, sir.
20% debenture, did they lose something?
No.
They didn't lose anything on liquidation. Who again? Bank OD, right? Bank OD, did he lose anything? No. Sundry creditors.
No.
Did he lose anything? No. But these are the liabilities. I think so, right? So in that case, what's the total loss on liquidation? The total loss on liquidation.
600.
Did we get 5,15600?
Yes, sir.
Okay, so now what do we need?
Maximum capital loss.
Okay, so statement of what? Cost. So in our statement of maximum loss, what and what do we need to bring? Yes.
Concern and book value.
We need our going concern values. Then our carrying amount or our book values, not so. So in that case, you see when we did the first question, now this question looks very easy. Or you don't see that it's easy.
Yes, sir.
So it's your effort. You let the first one pass. The second one's so easy. So in that case, now that we have this, let's see. So first, let's get our maximum loss from what? Our assets.
Yes.
Okay, so maximum loss from our assets. So let's list all our assets. What assets did we have? So we go and we list all of them. We had free LMB. How much? It's going to
13.
value was 132,000 also. Okay. Then we had PNM 8,000 also. Then we had what? Motor vehicle 10,000 also. Okay. Then we have stocks. Stocks, how much? 1,000.
1,000.
Then we have debtors.
5,000.
5,000. Then we need their book values also. So let's go and pick their book values. Freehold land and building was how much? Which question is this? The old question we solved, right? Freehold land and building. Book value was 120,000 also. This guy was 76,000. This guy was 25,000. Then stocks. Stocks, you're saying 120,000 also. Debtors 62,000. Then we have the patents, right?
Yes,
The
sir.
162,000 also. Hey, which one am I picking?
2,000.
It was 60,000,
Yes, sir.
with 60,000, but its book value was what? 162,000 also. Okay. So in that case, let's see what our loss will be. So 132,000 minus 120,000. So this one will be a gain. Okay. So since it's a gain, I decide to put my gains in brackets, right? Because the losses are more than the gains. So this one was a gain. Then we have 53,000 minus 76,000. It's always going concern minus what? Book value. So I end up with 23,000 loss, not so. Then I have 10,000 minus 25, meaning 15,000 what? Loss, not so. I have 106,000 minus 120,000. I have 14,000 loss, not so. I have 5,000. Hey, Salmon. Book value of this guy was 62, but we are selling them up for 5,000. Hey, they are book. Hey, we didn't bring, which one was the one something? Did I bring it well? Stocks was 106. 106.
Yes, sir. 10.
And that test was rather 5,000, right?
Yes, sir.
62 and then 5,000. Okay, it's true. So that means we lost how much? We lost 57 also. Then patent, we lost how much?
102.
We lost 102,000. Okay, so this is the maximum loss from our assets. That'll give us how much?
199,000.
199,000 also. Then we have other losses also. Other losses to consider. So I will consider writing off all my income surplus, right? It was in deficit. So income surplus, how much was that?
$270.
270,000. Then maybe my preference dividend. Because on this thing, they didn't lose. Here, if we like, we'll not make them lose, right? We'll not share some of the loss for them, though. So if you like, you cannot bring it because you not make them lose. But you bring it an apportioning anyway. So how much do we get them? Preference dividend, you're saying that's 18% of 120, right? How much?
216. 600.
Oh, sorry. The income surplus was negative, right? It's a loss. It was under assets, making it a loss. So in that case, what's our maximum loss? Maximum loss on reconstruction. How much is the loss that must be sacrificed? Sacrifices must be made. 21,600.
600.
190,600, eh?
Yes,
190,600. So in that case, let's go and share the maximum loss. Also, share of maximum loss. So liquidation, then reconstruction, right? Or reorganization. So let's see. Okay. So in that case, ordinary shareholders, how much did they lose on liquidation? They lost everything, right? They lost all their 423,000. On reconstruction, so I will want them to lose the whole 423,000. Meaning in my scheme, I'll say ordinary shareholders should sacrifice their whole investment, right? And introduce capital of 130 million. Makes sense.
yes,
Okay, then preference shareholders. Preference shareholders. How much did they lose on liquidation? You can visit our liquidation statement again.
2,700.
They lost 92,600, right? 92,600. So on reorganization, I may make them sacrifice their whole investment or convert 92,600 of their, because that's what they lost. That's what they lost on liquidation, right?
Yes, sir.
So I should find something better for them. What do you suggest? Should I let them lose everything on liquidation? Because if I tell them to introduce new capital, they will not be happy. Why? Because they are not losing anything on liquidation. So why would I want them to? Okay, on liquidation, they lost 92,600. So I should provide them something better than the 92,600. So how much should I make them sacrifice? They must sacrifice less than that, right?
Yes, sir.
Let's say I'll make them sacrifice 80,000. Do you get it? So this one is free show. That's what I'm trying to show you. So if I make them sacrifice that 80,000, or they should, then the rest I'll convert it to ordinary shares. Make sense? So that they are better off in the reorganization than the reconstruction. Do you get it?
Yes, sir.
Preference dividends on liquidation, they didn't lose anything. So on reorganization too, they mustn't lose. So if I don't want them to lose, then I must find a way to make them gain, right? So I'll let them convert their preference dividend to ordinary shareholders. So that's what I'm suggesting, right? So that I'll rather increase my share capital. Are we okay? So that's what I suggest. Because on liquidation, they didn't lose. Reorganization, if you make them lose, then they will not be happy, right? Because here they didn't lose. I hope you are starting to get it. It's optional anyway. It's up to you. I hope that's okay. Other shareholder, bank loan. Did he lose anything on liquidation?
Oh.
Bank loan when Lucy,
When you see
20% debenture.
on this way, you see.
Also in Lucy. Then who else? 490,600. Oh. It was 490,600, meaning the balance, because nobody else lost, right? Because all they should sum up to the total loss. The loss on liquidation was how much?
496.
496. Hey, this one was 490,600. I mean liquidation. 515,600. They lost more
Cancel.
liquidation. 515,600. Okay. So what I have to do is that this figure is even more than that. Not so. So since I've given 423 to these people, that means the rest should go to what? Our preference shareholders. Do you agree? So that to balance.
Yes,
So don't just give it. So you can also share according to what is left. So 490,600 minus 423,000. Meaning these people should only lose 67,600, which is even better, right?
yes, sir.
Better. Yes, so they are losing less on rate. So if you like, we will not do anything. Just let them lose only this amount on their account. So now you see we've balanced it off. You see, the other question was quite difficult. This one is so simple and straight to the point, right? And now this is the kind I see likes bringing. Simple one. Okay, so now that we've shared our maximum loss, where to next? Receipt and payments. Now so.
Sir.
Okay, so what should we pay? And now I'll leave it to you. What should we pay? So let's start with our payments. Payments, what should we pay off? What should we pay off? Because our 20% debentures did not lose anything, I'll pay all of it, right? Because they didn't lose anything on liquidation. Do you get it? So all the 112,000, maybe sundry creditors. So sundry creditors, so they didn't lose anything. I have decided to pay them off their 55,000. Do you get it? These are the two payments I'm paying. Now shareholders are willing to introduce how much? How much are they willing to introduce? So 130 million.
130.
And already the figure I have here is more than that, right? That means I'll let other people introduce. Do you get it?
Yes, sir.
Okay. So let's see. This one alone is how much? 112 plus 55, right? 167. Let's just pay maybe 25,000 of the bank overdraft. Okay, so bank OD. I want to pay off 25,000. So that I'm only left with how much? So that I'll only be left with how much? Bank overdraft now 125. And I'm paying off 25. How much would I be left in my account?
100.
100. I want it to be 100 figure, right? So now these are the total amount I want to pay. Should we buy new assets? I don't know. Maybe my working capital requirements. You can suggest. This question didn't suggest, so I can even put my name there. Okay, how much do I want to use for working capital?
10,000.
I'll leave working capital also. Maybe you can put here 10,000, right? But if you put here this 10,000, that means your receivables, everything, when you add them up, it should be that 10,000, right? Adding it up for you. Okay. So now that I've been able to get this working capital requirement or cash, right? Which you can suggest. But sometimes somebody can also say, okay, let's choose working capital ratio also of 1:1, right? That's current ratio 1:1. If we use 1:1, yes, then what would that be? Current ratio is current assets over current liabilities, not so. And so far, we paid up all our liabilities, leaving which one? Which liability have we left? Look at the payment. Which liability have we left?
Loan.
No, we paid off all the
Overdraft.
Yes, overdraft, we are left with 100,000, right? So we are saying that if we have 1:1, then we are saying that our liability, which is now the 100,000 also, should be equal to the current assets. Current assets should be equal to 100,000. So we are saying if current assets should be equal to 100,000, therefore, we know current assets in this question is equal to what? Stock plus what? Receivables, debtors, not so. Plus what? Plus cash, not so. Which is our balancing figure, not so. So now, if this one should be equal to 100,000, we know our stock. You see, it will even be more than 100,000 because stock can require 106. I get it. Stock
Yeah.
106. Debt is require 5,000. That means cash should be more than that. So this receivables, like if we knew the overdraft, if you knew you didn't pay anything, or we can even tell the company to increase the overdraft figure. It's up to you. It's so open, right? That's why it's good you even suggested a 10,000 so that you are saying that here should be 10,000 also. Giving us what? 121,000, right? No, so.
Yes, sir.
So you are saying that your this thing should be 1.21:1. No, so your current assets to your liability. So if you are done this, then you can use this to come and work this 10,000 again. But once you've suggested, it's okay because one was not given in the question. So you can just use this and say, this is my total payments that I want to make. Meaning how much capital must I raise? 112,000 plus 55,000 plus 25,000 plus 10,000.
202.
That means I must raise 202,000. From where? From where should I raise this 202,000? Who? Let's look at the receipts. Where am I raising this money from? First of all, ordinary shareholders, right? How much were they prepared to bring?
130,000.
They were prepared to bring 130,000. Then where should we raise money again? Hey, there's also another payment we need to make. Who can tell me what payment again we need to make? There were no reconstruction expenses, no, so.
Yes, sir.
There were. So these are,
There was a
that one is liquidation. We are not liquidating. Liquidating, we are done. So ordinary shareholders want to bring 130. That means I'll give the rest to preference shares, right? The preference shares should bring the rest. We do not have time. So you say preference shareholders should bring what?
72,000.
Should bring in 72,000. Okay, so that now we get 202,000, right? So yay. So now you guys should now give me the scheme with it. So propose scheme. Yes. 1. Income surplus and preference dividend should be what? Should be written off. 2. Ordinary shareholders, not so, should what? Should waive off or should waive off 100% of their investment, not so, of 4,000 to 3,000, not so, and introduce what?
130,000.
130,000. So they were millions as capital. Also. So what else? 3. Preference what? Dividends of what? Set preference dividends. Preference capital should waive off how much? How much did we propose that they should lose?
Nice.
Well, that one was on Wayo. What you are saying is on liquidation. I'm talking about reorganization. They said we said they should only lose 67,600, right? Is that not so?
Sir.
So preference shareholders should waive off how much? Should waive off 67. Is it 67,500? 67,600. Sorry. Should waive off 67,600 of their investment also. Their investment. And introduce how much? And introduce, you said 72,000, right?
22,000.
As capital also. So something simple. 4. Sundry creditors should be paid off, not so. Should be paid off. 22% debenture, no, so 20% debenture should be paid off, no, so. No, so these are the ones that we suggested. So that is your proposed scheme, and a working capital way should be introduced. So I could chip in something here. So working capital requirements of what? 10,000 CDs should be what? Introduced. Also, so that's a nice scheme, not bad. So now what's our resultant balance sheet? Statement of financial position. So as a smart student, before you even start the question, you would have gone to copy all the going concern values on your balance sheet. Do you get it? So in that case,
Yeah.
I know that my freehold was how much? 132,000 also. Plant and machinery. There's a 53,000 going concern. Motor vehicle.
10,000.
10,000. Stocks.
106,000.
1,000. Okay, then. Debtors.
5,000.
1,000. Patent. 60,000. 60,000. Okay. So these were all our assets, right? Did we buy any new asset? No, we
Yes, sir.
didn't. So we add.
There is 66,000.
366,000. Those are total assets. So equity and liabilities. Okay, so we have what? Share capital. How much are they prepared to introduce? 130,000 also. Preference shareholders. How much are they prepared to introduce? 72,000. Then we have liabilities. Which liabilities did we have? Bank loan, right? Bank loan, how much?
100,000.
100,000. Hey, we forgot one thing. Who can tell me what we forgot? The cash, working capital requirement, right? You guys said we should introduce 10,000. Or
Yes, sir.
that gives us 376,000 also. So we forgot some 74,000 somewhere. We forgot some 74,000 somewhere. Yes. Do you know? Look, preference share capital. See, See, ordinary share capital pool. What happened? The original investment was how much? So we have to work and see. Let's see. The original investment was 423,000 also. Not so. And we said they should sacrifice all the 423,000 and introduce 130,000 also. True or false? So that means here becomes only 130, not so. Then let's look at preference share capital. Their total investment was what? 120,000 also. And I said they should sacrifice 67,600 and introduce how much? 72,000. Or is that also? Maybe one.
Yeah, correct.
So we end up with 124, 400. 124, 400. Still have 354.4. That means we still have something left. 354,400. I take it from 376,000. We have forgotten something. We have 21,600. We saw some 21,600 somewhere. Where? Or is the other question rather?
So the preference dividend is from the other question.
It's
No.
this question.
Preference dividend we paid.
The preference dividend should be waived off. Waived it off. It is the preference dividend.
That's it.
Okay. So in that case, and give it to capital surplus to close it off. So I told you anytime you do not so preference dividend. You know why? It's a gain to the company, Mebwa, and it goes to capital reduction. So 21,600 balance of. We'll leave it as capital. 130,000 plus 124, 400 plus 100,000 plus 21,600. 376,000. Because when you waive off something, remember, it goes to capital reduction account. And capital reduction account, when I waive off, is it not a sacrifice to the company? It's a gain to the company also. So it should be a gain. And capital reduction, if you have any account, if you have any balance on it, it should go to your capital surplus account. So we ended up getting 376, 376. You see, this thing is freestyle, or still you have not gotten the freestyle.
Yeah.
It is very easy. So this one is all freestyle, but you must be careful. When you introduce something away, you see share capital. It was 423. They lost all the 423 and they introduced 130. Preference share capital, they had to sacrifice 67,600, right? But you see sacrifice, I took it out. Then they introduced 72. I added a 72. Bank loan, I wanted 100. And capital surplus. Because we waived off the preference dividend, it means that it is lying in our capital surplus as a gain. So capital surplus must get 21,600. So which of them is better? If they tell you to evaluate the liquidation and the revaluation or reorganization, which is better? Which one is better?
Reorganization.
Is better, right? So, and also the reorganization can generate us a profit. So if they tell us to, they say we should evaluate, right? So we can say evaluation of the scheme and the reorganization also, and liquidation, so something like that. So in that case, we are going to say what? The ordinary shareholders lose all their what? All their investments. So I can say ordinary shareholders, then I'll underline, right? Ordinary shareholders lose all their investments on what? On liquidation as well as what? As well as what? Reorganization also. But however, the reorganization grants them an additional investment of how much? Of 130,000 also, or 130 million, and also holds a promise of future profits, also future profit of what? 25 million per annum, also, and even higher profits in the future. Also, this proves reconstruction is better than liquidation. Also, so if we take preference shareholders, we are going to say that, okay, on liquidation, they lost 92,600, right? Which constitutes what percentage of their investment? Maybe 30%. But on reconstruction, they only lost 67,600, which is lower than this, right? Meaning reconstruction is better than liquidation. For all the other shareholders, stakeholders, they didn't lose anything, right? So their situation remains the same. So it's just evaluating the scheme for both the ordinary shareholders and the preference shareholders only. Then you are good to go. So that brings us to the end of capital reduction. There are so many questions out there, and choose. I'm teaching you to use your own style. If you use your own style, everybody's working will be peculiar. Some people decide to follow the same strategy. No, it doesn't work. You see this one, I was just suggesting, let me give this person 67,000. Let me give this person 5,000, like that. Any questions so far? That means now, if you are giving a capital reduction scheme design, you wouldn't struggle. Is that a yes?
Yes.
Okay, that's fine. Business valuation too, we won't struggle, right? So you have your 50 marks. Do we have our 50 marks on our hands?
We do.
That's fine. So we still have, what's the time? 12. So we have about 18 minutes more. Keep working, Waba have you. Okay, so let's see. That was CB, which was, we have OCB Limited, which was incorporated as a private company several years ago. Trading was profitable, but in the last 3 years, trading losses have been incurred and the board of directors is considering the alternative of liquidation or a capital reduction. The balance sheet has been given. I get it. So we have his balance sheet. And then they are telling us to examine the two alternatives suggested above and advise the board on which alternative is likely to be acceptable. Also, so this one, they have proposed a scheme for you already. You get it. This is the normal type. So this one, you don't need to propose a scheme. A scheme has been proposed for you already, right? So let's see. They said the company's freehold property was revalued to this. The directors believe its net disposable value would be that. It is estimated a breakup value of plants, and this will be that. Deferred development expenditure has been paid. It is estimated that if the company is liquidated, it could be sold for 200, right? The stock is estimated to realize this carrying amount in event of liquidation. One of the customers became bankrupt in March 23, and you are likely to lose 10 million of that amount. In the event of you going to liquidation, your liquidation cost will be 42. Reorganization cost will be 30. Ordinary shareholders are prepared to bring additional 300 million if they consider the proposed scheme satisfactory, right? And then the bank overdraft limit is 400. It is considered that a proposed reorganization of the company should result in net profit after tax of 150 million, also in 200 million or more in each of the years after. Preference dividends are 2 years in arrears. OC limited capital consists of this and that, right? So if we are going to propose their scheme, or we are going to propose a scheme, anyway, the question could be framed in anyhow. This question didn't ask us to propose a scheme, right? So since it didn't ask us, we can decide to do the normal one, just evaluate which is better, liquidation or reconstruction, right? It's up to you. But since you are doing scheme proposal as a question, we can switch this question into a scheme proposal, right? So what is the approach? What do we need to do? Just list with your, just say it with your mouth. Let's see. Liquidation, we'll sell all. Then did we have any fixed charge? Look on the balance sheet. Was there any fixed charge? We had, right?
Yes, yes.
50% debenture, 380, secured on what? Freehold property. Also. Then from there we go to what? Liquidation expenses. Did you have any liquidation expenses? Was there any liquidation expenses?
Yes, sir.
Liquidation cost, 42, right? Is there.
22.
Okay, so how much do we have now for our liability? So we have 380, we have liquidation cost. And did you have any preferential payables? Are we going SNET or anything? No, we weren't. Also, then was there any floating charge?
Bank overdraft.
Bank overdraft 210. Also, then you have trade creditors and accrued expenses. So now you take all your assets and their values. You see, this one wasn't listed, it's in a scenario. So you pick, right? Disposal value of this guy was 400, breakup value 90, shareholders who are prepared to bring in a new amount of this. So the same way you can use this to design the scheme, see how the scheme will go. If it is better than liquidation, you evaluate the scheme, talk about each shareholder, each stakeholder and its position, whether it's better to liquidate or it's better to reconstruct, right? In this question, I think it's even easier than the ones we did. Which here too, they've given how much the shareholders are willing to contribute. Meboa. Didn't they give it in the question? They said they are prepared to bring additional capital for 300 million. Meboa. So this one, you already know how
Yes,
much
sir.
they want to bring. However, this can be increased depending on how you want your question to go. I hope that's okay. So I hope it was worth it.
Yes, sir.
Nice. So if you would solve this question for me as a way, as an assignment. So you can just take a shot of the first page, and then I'll move to the second page for you to take a shot because I can't copy. It will take time. Is that okay? So just take a shot of page 1, then I'll go down for you. Then you take a shot of page 2 too. Who is taking the shot? So that you will submit it for me. Let me see each of your schemes. If you do copy work, I will know. I hope that is
The page 1 done.
okay. So page 2.
Done.
Okay, so you can post for your friends now.
Okay.
Okay, then have a beautiful night, and then we will keep on the good work. So next week we are diving into consolidation theory. Okay, so we are going to do every theory, possible theory. So capital reduction and business valuation questions come with console theory. So this comes for 15 marks. Console theory will come for 5 marks, making 20 in question 4. Are we okay? So question 4, we must master question 4. This is question 4A. Question 4B is console theory. So every theory under console will be exhausted next week, together with, we'll start with mixed group, vertical group. So once we are done the following week, we are going to go into changes in group structure. Then if we have time, we'll start with foreign subsidiary. Then we go into console cash flow. Then the ACA, that means we are done with corporate reporting. The ACA is standard solving question. So, okay, so I'll see you when you see me.
Okay, sir.
Please learn from me, right? That's why I always break down concepts for you so that it doesn't look complex. Okay, then. Have a beautiful night.
Thank you.
Okay.